What's going on? It's AK. Let's talk about this Uber IPO and how bad the company is looking. For investing, don't worry, I actually love the product, as everyone does. Not only can you get a ride wherever you are, but that Uber driver always comes with a particular perspective, giving you the culture of the city that you're in. A few months ago, I was with my friends in Atlanta, so we landed at the airport and hopped in an Uber. And within 5 minutes, our Uber driver was showing us all his homemade videos of him smashing prostitutes. It was a nice bit of entertainment as we rode through the city. His camera work wasn't bad either. He's like, "Hey guys, I really hope you enjoy your stay. Here's an awesome website in case you get bored. alligatorescorts.com." He was a caring guy, really looking out for us. Alligator Escorts, great website with a great theme song. Most are ratchet, some are nice. They'll do what you want if you pay their price. It's Alligator Escorts. Make sure your dick don't get chomped. I really love Atlanta and its people. But what were you talking about? The Uber IPO, right? Well, no one has a better take on Uber than Ben Thompson at Stratechery, the best tech analyst in the game. And I'll link out to this article in the description. So when Uber IPOs and gets on the market, which might have already happened depending on when this video comes out, but they're expecting it to be worth around $100 billion. Now I've kind of already given you guys my opinion on what's been happening in the private valuation space with all these IPOs coming. You remember we did this Lyft IPO video. We went over the analysis from Jawad Mian. And long story short, I was not too bullish on Lyft because of the way they burn money and buy customers. I love the idea of the business, just like Uber, but the actual financials, not so much. And it looks like the market didn't either. I mean, after its IPO, it's dropped over 38%. Not pretty. Now, I don't think the Uber IPO is gonna be much better. And Ben Thompson explains how Uber was hiding a lot of numbers in their S1. And an S1, if you don't know, is just the initial registration form for new securities. So it's what you gotta fill out if you're IPOing. So the company is supposed to provide information on the planned use of capital proceeds. They're supposed to detail their current business model and competition, and then give the prospectus on the security itself, so the actual shares. So basically through the S1, you're supposed to learn a lot more about the company because it's becoming public. There's a big difference between private companies and public companies. There's a lot more regulation for the public company on what they need to report. Private companies don't have to report numbers, right? That itself is a huge difference. So it's supposed to be like lifting the veil on the company. And you can see right here that Lyft had its first earnings report and investors were not happy. After earnings, the thing dropped another 12%. And that's the whole idea of this private market bubble popping, right? Because all these numbers were so secret before and now they're coming to the light. And private valuations can be crazy, like they can be whatever. And what everyone's watching is how those private valuations hold up in the public market when they're getting like real scrutiny with a bunch more investors. And when you see something like Lyft dropped over 38%, it's not a good sign. So Ben starts off by saying that a lot of the questions that he wanted to know in the company's S1 were just glossed over. So first we can go over what the market, at least the private market, thought Uber is supposed to be. Because it's not supposed to be just a taxi company. It's supposed to be way more than that. It's supposed to be completely changing the mobility game, redefining how cars are used. And transportation and cars, that's a huge market, right? So Uber considers their total addressable market as the number of miles traveled by everyone. So they said there was 11.9 trillion miles per year, representing an estimated $5.7 trillion market opportunity in 175 countries. And Ben says that's not a small market. It's about 7% of gross world product. So based on that total addressable market, Uber says they think they're just getting started. Consumers only traveled approximately 26 billion miles on our platform in 2018, implying a less than 1% penetration rate. So Ben brings up the most cliche parody line of startup culture, that every company seems to say that they only need to get a small share of this very large market to be successful. That's what every startup comes in with. So Uber's entire pitch is that the idea of having a car just sitting idle in your driveway and paying so much money for that doesn't make sense in a world where everyone has a cell phone in their pocket, because that enables everyone to call a car or a ride exactly when they need it, and only then. So you don't have to waste all that money on a car. So think about it, no cars at all. Everyone just calls an Uber or something like it. So no car insurance, no car payments. The cars almost become a public service that you pay for, of course. So again, that's the idea of Uber not just being a taxi company, but completely changing mobility. Now what Ben does is jump into some of the problems with the S1 and shows how Uber is hiding some numbers. And the thing is, when a company is trying to hide numbers, that is not good. That means they're trying to hide something bad because they're afraid of what investors are going to think. So the first point is that the data they shared from developed and emerging markets, they're all grouped together. They didn't split them out. So for example, you can't segment out how Uber is doing in the US and Canada, which is pretty important, right? Because that's where Lyft's market is. So one of the best ways to analyze a company is comparing it to another similar company. When you hear the term comps, that's what they're talking about, comparisons. And then another problem is that Uber isn't separating out their straight up ride rides from their ride sharing and then other businesses like Uber Eats. It's all in aggregate again, all grouped together. So once again, you can't analyze what money and what expenses are coming from each section of the business. And something like Uber Eats is pretty different from a straight up Uber ride, right? You need to have that information. The next big question is the scooter question. So 46% of trips in the US are under 3 miles. And the whole idea in this space with Uber, Lyft, and a bunch of other companies like Bird, I'm sure you've seen those Bird scooters, is that scooters, e-bikes, and other non-car solutions should take over those little trips below 3 miles. So obviously, if you're taking a scooter instead of an Uber, even if it is an Uber scooter, because of course they have scooters too, that's going to impact Uber's core ride-sharing product. And Uber admits that. They say the introduction of new mobility products like dockless e-bikes and e-scooters, they're cheaper than their existing products and offerings, so they should lower the average gross bookings per trip on the platform. Basically, they're saying they're about to make less money. So Ben says this is okay in theory, right? Because if Uber is a leading company in this and they have the bikes and the scooters, it's good because they're still the forefront of the transition in mobility. But the S1 offers no details about how everything is going. Is this new mobility with the bikes and scooters growing? How much does it cost? Are those increased trips really hurting the revenue from ride sharing? Ben says it's early days for these things, so the lack of data is understandable, but at the same time, the lack of data is kind of a theme of this S1. Looking shady. And I don't remember where I was reading this, but I heard some numbers about scooters. And scooters are a serious money-losing business. One of the biggest problems is that those things get beat up like no other. So there's a very high churn of having to put new scooters in the market because the old ones break. And you know the price of using those scooters is super cheap. It's like $1 to activate the thing and then 15 cents per minute afterwards. Super cheap. So is what they're charging people covering the cost that it takes to maintain these scooters? No. Probably not. And that's the story with all these private companies doing these things, right? They're just burning money, trying to grab as much market share as they can to hopefully make it a profitable business in the future. So that's why, as Ben is saying, it would be nice if they kind of broke out the numbers a little bit. Next, we got to see what's happening with self-driving, as in autonomous vehicles, because that's a huge factor to companies like Uber and Lyft, right? Like what happens when you don't need drivers anymore? And that's not too far in the future either. Like look at Tesla, those cars are driving themselves already. And Google's working on it with Waymo. So as Ben says, Uber actually has a decent response for this. So they talk about how when there are standard well-mapped trips in a predictable environment and good weather, that's probably where autonomous vehicles will come into play. But other situations when there's a bunch of traffic, complex routes, bad weather, you're still going to need the drivers. And especially for high demand events like concerts or sporting events, when you get that surge pricing, there's not going to be enough autonomous vehicles to help during that period. Again, you're going to need drivers. So they think that they are in the right spot and prepared for a hybrid period of coexistence between drivers and autonomous vehicles, because you need both. And the drivers that they already have are a critical and differentiating advantage for them, and they will continue to be valued partners for the long term. So valued that they're all going on strike. But okay, it makes sense. The autonomous vehicles aren't going to be able to do everything for a long time, because again, I forgot where I saw this, but the last 1% of autonomous driving is the most complicated. Like you can get a 99% there, but the last bit, what decision to make in these fringe situations, really tough to program. Ben brings up another problem with Uber though, because Google and their self-driving Waymo has become closely allied with Lyft. And that's a big problem for Uber, because if Waymo becomes the main thing for self-driving cars, well then if they're partnered with Lyft, that's who they're going to use to go to market at scale. And because of that, Lyft actually becomes one of the best ways for investors to bet on Waymo itself. And then the more money that's being poured into Lyft, the more problems for Uber. They're going to struggle to be profitable competing. So yeah, the self-driving question of who's going to have the autonomous vehicles, that's always a problem. There's the issue of Uber being cut out of that. And then of course, there's the question of their profitability. We all know that Uber loses a bunch of money. And here's what Uber had to say about it. We have incurred significant losses since inception, including in the United States and other major markets. We expect our operating expenses to increase significantly in the foreseeable future, and we may not achieve profitability. Amazing that you can IPO without any plans to become profitable. But again, I guess it's a bet on them completely changing mobility. But as Ben explained, there's a lot of factors involved, and there's a lot of competition too. Uber measures their annual losses in the billions, but in their S1, they didn't really explain where any of those losses are coming from. So Ben has a long list here of stuff they didn't mention. How much it costs to acquire Uber drivers? How much is customer acquisition? How much does Uber Eats cost to acquire restaurants and acquire customers for that? Uber's retention rate for drivers and riders. Ride sharing, revenue and profitability by geography. As we said, they didn't didn't break anything out, how costs are allocated, especially when it comes to rider marketing and incentives. And I told you guys before, with Lyft, I get promotions every single week saying, hey, take a few bucks off every ride. How much are those incentives are costing them? I'm not the only one getting them. That would be nice to know in the S1. Same with the breakdown of Uber's many offerings. Like, how much are they making on an Uber Black versus an Uber X versus an XL, an Uber Pool? All important stuff to analyze the company. So to sum it up, Ben says that this is at best disappointing and at worst feels like a cruel trick on retail investors. After all these years and all of these theoretical arguments about Uber's potential, all we have are cliches about small pieces of gigantic markets and a heap of numbers that reveal nothing concrete about the business. It's all shrouded in mystery still. The theory of the company remains plausible and the company is decreasing its losses, but if it was up to Ben, he would not be investing in Uber. He says this S1 is so devoid of meaningful information despite its length that it makes me wonder what, if anything, Uber is trying to hide. He kills it with this line. Listen to this. If I'm going to be taken for a ride, I want at least some idea of where I'm going. Isn't that the point of Uber in the first place? What a way to end an article. And the point obviously is that investors are being taken for a ride with this IPO. So we'll see what it does when it comes on the market, how the price reacts. I expect it to kind of act like Lyft. And I mean, as of this recording, you could see the indices are getting hammered. So it's probably not the best time to IPO, but how many years have they put this off for? Either way, even if the market was trending up, I would expect Uber to kind of collapse like Lyft after the IPO. We will see what happens though. I'm not touching it. And hopefully you have a little more information about Uber if you decide to invest in it. Or maybe you just have more questions now. Sorry. But if you want more about what's going on with all these IPOs, definitely check out that Lyft video I mentioned before. It'll be linked up here. And let me know in the comments what you think about the Uber IPO. Love to hear your thoughts. And if you haven't already, make sure you subscribe to this channel and hit that notification bell for an email notification when our next videos come out. We publish almost every day all about markets and business. So subscribe and I will see you in the next video. Stay fallible out there. Bye.